The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. This is the Tiger Technicians Hour. Remember, we start off at 9 with Tommy Jr. doing the market kickoff, fabulous show, and then we just continue right through to Tom O'Brien wraps it up at 3 to 4. We're looking at the Dow down 439 points at 32,217. In the chart that we're looking at here on the left, the daily chart, this deeper move down, certainly than one would have expected after the excellent session yesterday, that's really telling us that the pressure of these retail stocks is impacting the overall market in the sense that, wow, if a Target really is usually a very well-run company, just tanks 25%, down 53 points at 161, I wouldn't say it's out of the blue because a lot of things, I mean, we were talking about, all these, the shipments just being held up. Everything's just going wrong for them. But at the same time, you're looking at Walmart doing the same thing. Walmart having gap down huge yesterday and followed through with the second gap this morning at 125. And yet 3 days ago, it was trading the 150 area. The other thing is, let's see what Costco's doing, because Costco is just a little bit different, but not the chart. The chart is down sharply. It is down 44 points today, 445. It's down almost 10%. This is going to be tough, because once you start to impact retail, that's the layperson, and the layperson really, people buy. They buy and buy and buy. That's one of the characteristics of shoppers. And once that starts to be impacted, then you start to be impacted. You really become impacted by higher fuel costs, higher pretty much everything that has to do with entertainment or eating. And that's a big difference. So I'm going to respect this as something, even though we are long, still have the long positions. I want to say now it's for the market to prove itself, the resiliency to the upside. Yeah, look at KHC, that is Kraft Heinz company. It's trading down $1.64, which we were 152. I'd spoken about this a few days ago. I said, look, the left side, right side, vertical assessment says that back around about the 23rd of April, Heinz was trading in the just about 40 in the 44s, pulls back sharply to the 41, just 3 points, but there's a sharp move down concerning where it came from, then rallies back up, makes a slightly higher high, peak F in the daily chart in the Chapman wave, and look at the technicals. The MACD had deflected lower, the stochastic had pulled back under 80%, and yeah, we are impacted by the others, but it really is the whole area of snacks and condiments. Everything there is being affected. And as a result, what we're looking at is this double top in this huge cup formation in something like a Kraft Heinz, which is not the all-time high, but it's certainly the high from around about May, June of 2021 in the 45s. I'll tell you exactly what it was. It was 44.95, 28th of May, week of 28th of May. 94.95, 5, 28, 21. And look at that sharp pullback to the 33 area, and then rallies back. And where does it stop? It stops right in the 44s again. These double tops are amazing. However, the difference is that although the technicals were weaker in this run to the high that was made a week and a half ago, the technicals, yes, still 87% in the stochastic. So I'm looking at this and I'm suggesting that we're going to find out within 2 or 3 days, maybe even shorter than that, which areas within the sector that we would consider as a defensive area, that is the food, the beverages, the snacks, etc., which ones are going to hold up? Is it more the food area than maybe the retail per se, where it covers a whole bunch of other things as well? That's going to be very important. Yes, it's a very ugly candle today, but all the technicals in the daily, no, I shouldn't say that. The daily technicals are still much weaker on the right side than on the left, but not so in the weekly chart. So let's see what happens. If we can find some support in the 40 area and then have a bounce to the 42s the next couple of days, that'll say, okay, it was impacted by the other areas. Walmart in the den, mentioned in the den, Walmart is same story, yes. So Walmart, once again, this is kind of the overall retail. I don't think it's specific to the foods per se. But look at this, 160.77, the 26th of April. We are now, this is the 18th, so we're less than a month away, and we're trading at 125 in Walmart. Peak G in the daily chart, peak G in the monthly chart, in the weekly chart, peak D in the monthly. Not good. Question came up here. Basil, you're always looking at the rectangle formations. Often mentioned in the past, when a stock is in a long rectangle formation, the first big move out of the initial rectangle is many times the opposite direction. Looking at Walmart, it has been in a rectangle formation. Well, it depends on how you look at the rectangle, Hector. So let me just show you something. Walmart did have the rectangle formation in the weekly chart, and I've discussed this for a while. Then it popped up to a higher high above the 147 area. It went to the 151s, and then it pulled back sharply, and then went under the support. But this breakout, which I had to call an F and a G, at the tops, I consider maybe A, B, but I had to be as conservative as possible. And that says that this particular doji candle high of in Walmart, WMT is the symbol on the 22nd of April, that said there should be a pullback back into the rectangle. So in a sense, I'm going to say, let me just change this a little bit, the rectangle formation, make it a little bit bigger. And that would say that the aberration was the push, just like IWM, the Russell 2000 did some time ago when it was in that year-long rectangle. Then it broke to the upside in a leg D, then went to peak D in the weekly chart, and then plummeted below. Let me just show you this, because patterns are what we talk about here at TFNN. A lot of us do that, IWM. Look, here's the rectangle formation. It was forever from March of last year, 234's high, 207's low, and then it stayed in there, and then it suddenly broke to a leg D, then a peak D at 244.46, broke down, and from that one, it went all the way below. It did a one-to-one almost to the downside, tried to rally back. Remember, the rule of thumb is that it tries to get back to the rectangle just to say goodbye to friends because it didn't have a chance because it was so quick to the downside, and then it tumbles down. And yeah, so in a way, we're looking at this particular pattern. So let me see if Walmart's capable of doing that. Okay, so this is the rule of thumb that I would have. Everything is broken from the rectangle to the spike to the upside, to the pullback, to the midpoint, and then the midpoint didn't hold, and it went right down to the bottom of the rectangle, which is at about 133. Now it's smashed to the downside, but it's the monthly chart that has the rectangle that has been worried, and that says for the next 3 to 5 points, 3 to 5 points at 135.50, Walmart had better find some support for a decent up rally just to have a bounce. We'll be back.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Monktard Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Monktard feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Monktard as an attractive de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so let's just do this. The crude oil ran to 112.39. It's trading now at 110.09. This is leg D. Here's another rectangle formation. How long can this particular pattern stay? Well, we've seen that it can stay sideways. Look at this. It stays sideways from the beginning of March between 90. There's a continuous contract between 90 and about 112. And here we are at 110 in leg D. Now, I'm going to make this exactly the way it should be with a high of 113.30. That was the high of the 24th. That's the key number to look at. So this says if the pattern repeats over and over, which patterns tend to do, they become fractals of one another, whether it's the short term or the long term, the patterns stay the same. That would say that there could be one more spike to the upside in crude oil and then possibly a pullback into the midpoint to test the 105 support. If it takes that out, then we could slide all the way to 91 or 90. But that's just speculation. All I can say right now is the MACD is good. Stochastic's very good at 87%. The 9 is still over the 14. So there's still strength in the daily chart. The weekly chart has a lot of strength because it's fulfilling this cup formation within the rectangle. What we're looking at here, I didn't put the rectangle in, but now I will. The rectangle is right there in the rectangle, right? And the MACD is still good, not great, but good. Stochastic's very weak at 56%. The on-balance volume is strong, a tad overbought, in fact. Monthly chart is very, very strong. But the stochastic has dipped to 75% from 80, and that inverted, that kind of inverted hammer candle that we're looking at from 3 months ago, that just says if this is a pattern that repeats as it has many times with the Chapman wave Roman candle pattern, if there is a weekly close, almost got it there last week, a weekly close above 110, let's make it 111. A close above 111 says, whoa, now there's an even better chance that we could try to reach the high that was made at 128. I have to go step by step. I'm not going to go that high. I'm just going to say there could be a rally to 118, 116 to 118. That'll be the first step. So we're watching this very, very closely. Here's another thing that I want you to talk about. So the pattern question in the den was, Basil High, as Peak G says, larger perspective, QQQ for X, your monthly chart, MACD shows crossed down in December, headed down more, stochastic 2, is that safe to say? So let's go to the QQQ. We are now out of our QQ position. We've taken some nice gains in our long position. We actually had the TQQQ, which is 3 times long. We took profits yesterday. We've taken profits and we got stopped out today for a gain. I didn't want to give back anything today. We did have a very short-term trade, took a very small loss. So overall, we had a very, very nice gain. I preferably, if I had my druthers right now, I would have liked to have kept some part of the position, but we've taken a chunk off, and then the rest was stopped out. I don't mind. That's the way it is. So the Qqq monthly chart, the 9-period moving average is within a hair. I would say a close below 280 on the daily chart. I'm pretty sure that would trigger a crossover. The green 9-period moving average would go under the 14-period moving average, and the Qs, which I've been talking about for some time as being the weakest of the indices, needed right now to hold good strength and be able to almost lead the pack to the upside, not the downside, down 1.7%, the S&P's down 1.6%, the Dow's down 1.4%. So this is not that great. But the pattern, when you look at it, well, I can take this long, we're out of it. Long, we're gone. I might try it again. I don't know yet. It's a really important couple of days because I don't want to go into all that. I'll do it in a moment if I have time. So the big question here is, am I about to get a sell signal? I've already put a down arrow. So basically, I had anticipated a sell signal. If there is a cross of the green going under the 14-period moving average at the end of the month, end of May, I'm going to have to say that's upgraded to a sell mode. The MACD is very weak, stochastics down to 40%, on-balance volume is weak, and now we've got the only lead indicator in the QQQ, which was the green 9-period moving average, just about a turn pick. It hasn't, so I don't want to over-anticipate, but you've got a sell mode in the weekly, you're a sell mode in the daily, just a very short-term signal that said you possibly could get a buy signal. We haven't yet got that, but the MACD actually right now as we speak is down 0.03. The histogram says that the 9-period differential of the MACD could actually cross positive if there's a bit of a bounce a little later on today. So with all that said, you're absolutely correct. It harbingers not such a good sign for the overall market when the QQQ's monthly chart is joining the daily sell mode, the weekly sell mode, and about to go from a sell signal to maybe a sell mode. I don't want to over-anticipate, but I'm just saying that's the reason why we still have a big cash position, and we've had new positions. One got stopped out yesterday, but at the same time, what I am looking at is we've got some very low-priced stocks that have done really well on a percentage basis. That's the way I'm trying to handle the money for subscribers, so we don't overpack our portfolio with $200 and $300 or $150 stocks or positions. Rather, we have a couple of those, but at the same time, we also, since we are still long the Dow, we also have single digits. I'm playing those. We missed one today. Unbelievable. Oh, question came up. No, I just saw it. Basil, can you take a look at AGRI? G-Man in the den wants to know. Well, I don't usually like to talk about stocks that we have just got, but we didn't just got this. Ironically enough, this is a stock that I've been talking about for a little while now for subscribers. It's called AgriForce Growing Systems Limited, agri-focused tech solutions, developing innovative solutions for high-value crops. My thinking was, I don't know why this is so low, but there might be a problem there. But I've loved it. I missed the big move up 3 days ago when it went from $1 in the $1.50 area to $2.80 something. Was it $2.89? Wasn't it $2.90? Yeah, $2.80. So, and it pulled back. Yesterday I was going to say let's start a position, but we had other things that we were looking at, so I didn't. And this morning I said let's get a position under, start along under $2.60 with a 0.20 initial stop. That's a little wide for me for a stop, but you're talking about just a single digit stock. It's very hard to get in without a little bit of wiggling. And if it hits 281, take a tad off and raise the stop. So unfortunately, it's unbelievable. I sent this out. I was going to try to send it out earlier, but I sent it out. My newsletter went out at, I think, 8:11 is when most people should have got it. And if you look, I haven't got it right now, but if you had looked at the, this up here, AGRI. If you had looked at Agri as it was unfolding, at 8, it was still trading at, what was it trading at? I'll give it to you in a moment. It was trading at, I'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, Bill. So we're talking about AGRI trading at 281, up 13 cents now, hit 313. So what happened is, within 3 minutes, it was just stable at about $2.65, 69 cents, not coming into our price that we wanted. And then it's almost as if someone had read the newsletter because it just started to scream. It went 291, 298, 303, 3, whatever it is, and then it hit the high of 313. Now, on a pullback, I still would only want to get it under the price that I'd said. And Now it's kind of done its work for it, and it's got a little bit of recognition because that volume must have been seen by some people. So now it's on the list, and now that I'm talking about it, AgriForce Growing Systems, it seems to me it almost looks like a biotech. Look at this initial run. It comes out as an IPO in the 5 area, pulls back to under 4, screams up to 8.45. This is the week of the 9th of July of 2021. And then it takes a dive, and it goes for weeks sideways to down, lower highs and lower lows. And then suddenly it has this, must be news-related spike right here. On the week of the 29th of October, it goes to 715 from a low of 204, just that week alone. And then what does it do? It has a little bit longer timeout, lower lows and lower highs. It's almost as if you took away these wicks of the candle. You just have a stock that's just making lower lows and lower highs without anything spectacular. And then what does it do? It goes from 1.12 January, the week of 28th of January 2022. And the next thing it goes peak A, peak B, peak C, and then spirals this week to a leg D, has a high of, not this week, I'm talking about the week of the 25th of March. It goes to $6.10. So it's making lower highs and lower lows, and then it plummets down. This time it hasn't made a lower low. That's the reason why I thought, this is very interesting. So now it's at 281. It's got a nice gap up candle in the weekly. That just happens because on Friday it was one level, and on Monday it gaps up. That's why it's a weekly gap. That's a little unusual, but I don't put too much importance into the fact that it's a weekly chart. I do like the fact that it's got a gap, because that gap could be it could be a trigger for a move higher if, in fact, by next week there's a higher high than this week, which was at 3. Well, so far it's 313. So we'll see what happens. But I think it's in play. But it looks like a biotech. These big spikes in the failure patterns. I just don't want to see this particular low taken out, the low of 132 that was made back on the 12th. I don't want to see that taken out, because that says, oh no, this is nothing you want to mess around with. It sounds like a great field, like so many of those stocks in the NASDAQ that sounded just fantastic, like a firm right there. There we are. There's a firm in the den. Terry Coco is talking about a firm short covering. Look, a firm is trading. This is a firm, interest-free and interest-bearing loans. Partners provide interest-free payment plans, discourage use of traditional credit cards. And it goes from a high of 100 and, did I type that in? I think I did. But if I didn't, I should have. Yes, 176.65 peak F high. I think it was around about November the 9th. And it has a little bit of a tumble, and it goes down to the low that was made at $13.64. It's almost doubled that. It has doubled that. It is now at 26.66. Is this the turnaround that people wait for, with a gap up that never gets filled, or we're going to fill the gap? I can't answer that other than to say that the CEO was on when it was 18. Well, I remember the CEO way back with Kramer when it was up in the 100 and something level, being interviewed. And of course, it was a fantastic company then until it dropped to 1364. So maybe this is a turnaround. But what I am saying is that things can sound fantastic here. There was another one. What was U? U was another one. U is Unity Software, gaming creator. I remember the CEO saying, oh, this company, everybody's using us, even not just the gamers, but everybody. And the thing goes from 210 round number high back in November of 2021 to a low just the other day of 29. What was that? 29.09. I would say there's a bit of a tumble. So yes, you've got to be careful about what the CEOs. And you know what? I don't have any real proof that these guys aren't telling the truth in their own minds. I know from CEOs that I've known personally, like tennis with or good friends or whatever it is, they are very often the last to know what their stock's going to do. They even say, I have no clue what the stock's going to do. I can just tell you, we're thising and we're thating and we're thising and we're thatting. And that's all I can do, is trying to manage the company. So they very often are telling what they really believe, maybe a little bit exaggerated. So that's not the problem. The problem is when the stock breaks a certain level of support, like a Shopify, and go from 1,762 back in November, just November of last year, and hit a low of 308.81 just less than a week ago, that is a serious problem. And I always put the notes in if I ever there, and I happen to there it is. Harley Finkelstein, CEO, shop at 1567 with Kramer. Starting point for a business. E-commerce helps small and medium-sized companies, retail expansions. Just went on and on and on. Right there, this is what I wrote. And a little bit of a problem, goes down to 305. And he could have, I'm not saying he was exaggerating anything, but I am saying that sometimes the business is so intense and you're so busy that it's really hard to see the forest for the trees. Or is it the trees for the forest? So, okay, enough with that. Let's get back onto it. So a question came in here. Is it a statement or a question? I never know here. Can you look at Disney? So Disney is trading right now at 106.52. 203.02 was the high March, just over a year ago, 2021. It goes to 203, and it's just been tumbling down ever since. Now, what's really important about Disney is that it's a very complex situation, because within the context of all of they've got movies, they've got entertainment, they've got theme parks. I mean, you can go, I've probably forgotten half the things that they actually are involved in. That makes it, it's not a simple solution that says, oh, summertime's coming, those Disney the venues, outdoor venues are going to be packed. Maybe they will be packed. So all I can say, I'm looking at the price, and this channel that it's been in, I wish I could actually draw a channel. I can draw a rectangle, but I can't draw a channel with both sides at the same time. Wouldn't that be nice? In fact, for those musicians in the audience, you might, if you're old enough, you remember there was a period where you had to do your own staves, like in the Mozart days and all that, and there was this little thing that you put in the ink and roll it, and it gave you the 5 lines for the staves. I would like that right here, to be able to draw a parallel channel right there. So what we've got is, I don't even need that, we've got the 9-period moving average. I'll talk about Disney as soon as we return, because it is a very important stock. It's just been decimated. Nothing seems to come right. Every time any good news comes out, it doesn't seem to respond very well. So I'll talk about that as soon as I return.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're going to calls right now. I didn't realize they were waiting, but the low that was made at 23, that was yesterday, 23, that was at 1 o'clock, at 4012 in the S&P. If you take a measured move, it's just gone about 4 bars later than that, slipped to the 4,000 level. This is really important for the S&P. A lot of people ask, could I give it an upside projection? Well, at this particular point, the S&P futures needs within the next hour and a half, I'm giving it a full 90 minutes, to try to close above 4,033 anytime after, I'd even say anytime after noon, if it's able to find support and close above 4,033, then I'll say, phew, at least in the very short term, save the day. Let's go to our first caller. We've got White Shark in Massachusetts. Your question, please.
Hi, how are you, Basil?
I'm well. How are you doing?
Oh, I was diagnosed with COVID last night, so I have COVID, but I am doing okay, though. I am doing okay. I'm still here, watching over things and ready to see what we can do here. So my question is,
yes.
Is that one of the places to be in the energy stocks in some room? Is crude going to take over as one of the safe havens here? Is maybe some of the commodity areas, gold? Is what is going to move into the sector that's safe?
So
somewhat.
to make it as simple as possible, at this particular point, we still don't really have any proof to say that we are in a process of creating, I wouldn't say a glut, but at least some kind of amelioration of the crude oil. It's still a crisis as far as I'm concerned. But I'm thinking it's getting real close to at least some kind of a pullback. That's crude oil itself based on the rectangle formation. But it is so difficult to find. I mean, who do you really believe? Who do you know? And who do you listen to, and what can you believe? It's very tough. So I can just look at the chart, and the chart says to me that big spiral to the upside back on March the 7th to 128.60 in the continuous contract. So a very sharp, immediate Eiffel Tower, straight up, straight down pattern that we talk about in the Chapman wave methodology. Hit the 50-period moving average. Had a big arch formation, had a second smaller arch formation, and now is making rising highs and rising lows. But at D, which did not break above the 113.30 high of the 24th of March, it kind of stalled here. So I suspect there could be one more pop. I'll make it as simple as possible. If crude oil in the next 3 days closes anywhere around 117 to 118, there's a real good chance that the conditions are going to be rife for a move back to the 128 level. But if in fact it starts to pull back and goes under 100, I'd have to say under the 14-period moving average, under 104.50, let's call it 104, which means that that means a lot of oil is available. Then what I have to say to you is, then I think that the stalling motion is going to continue, and that stocks like, I'm just putting them in a category now because so many people have asked about them, the stocks like an Exxon, which is G/C to the upside at a new high, stocks like a CVX, and these are the multinationals, also in a big rectangle formation, are going to be the clues, because if CVX trading at 171 even touches 178 just once, it has to just pop, it doesn't even have to close. That's basically saying that the whole energy sector is still under duress, and that's really what you've got to be cognizant of. So the question I think you really want to know is will I be looking at crude oil as an intermediate play that can pull back, but over the rest of the year, they're going to be higher highs? And the answer is, I believe it's in play, but you could actually stay in a sideways move for a little while at the higher level, and that's using up a lot of energy. And that doesn't mean to say that it can be breaking out, but the moment you see crude oil at 118 or so, I think you have to consider that the whole area of this energy sector is going to be back in play for another big move to the upside. So the answer is, crude oil is a really big issue. Yes, it's going to it should hold up very well. I do see some kind of a pullback, could be here in the short term, and how that pullback holds is going to tell you more about the positions that you can take, if you aren't in, the new positions you can take. So I'm not trying to obfuscate, I'm saying I'm looking at the charts, and the charts are going sideways. Sideways is always a sign to say, well, you have to break out of one of the levels on the upside or the downside, and we haven't done that yet. We're very close to it, but we haven't done it. So the answer is yes, crude oil is in play. How you do it when you're buying, say, one of the oil service or maybe multinational here at the highs, I would say you've got to be judicious about it, because I wouldn't have the same number of shares going in now as I would have, say, three months ago or even 6 weeks ago. I don't know if that answers your question, but I think the risk is now a little bit greater, even though we could see a big move up.
Yeah. No. You spot on. I just wanted to mention too that I was looking at TJX. TJX is having a pretty good day today. I know the retail sector, has, but TJX is having a pretty good day today.
Yes, it is.
Yeah.
And that same rotation through the different sectors with the different stocks, we're seeing that all over. Even IBM has held up way better than something like a Salesforce when they're both purportedly in the cloud area. So you've got to be, that's why I'm saying, for subscribers, I'm trying to be as stock specific as possible. And I'm just saying that's the best way to do it. And then you also, I'm on a short leash. I mean, in other words, when we get our profits, I keep scale in and take out our profits, and we can get back in, or we'll keep a smaller core position. That's all. So I hope that answers the question.
Oh, it does. You have a wonderful day. Top notch, Basil. Top notch. You're top notch.
Thank you. So, folks, another question. Is Mike on the line? I'm not sure. Mike, are you there? Or was it just a question? So I'm not sure if Mike, if you're there, just give me a yell and say, I'm here. But in the meantime, Mike in Ormond Beach. Yes, hi, Mike. How are you?
Hi, Basil. My question is, with this pullback we're having, what areas do you have your eye on for, the next big move up? Which areas do you think have the greatest potential for the biggest move up after this pullback is complete?
So that's a question with a whole bunch of ifs. First of all, we don't know whether or not the low that was made just on Thursday is a low that has legs to the upside, because this big move down today is something that you have to respect. So give me a second. I'll be right back here after this break. And during the break, I will just specifically talk about sectors that I'm looking at for the bigger move in 2022. I'll be right back, folks.
Right.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key selective stocks and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back. The Dow is down 542, S&P is down 77. And the question really is, it's a fabulous question, because this is what is on the tip of the minds of just everyone, is to say, where do we go and what do we do? I mean, you thought that a Walmart was doing so fantastic. You thought that Target was doing well. And then suddenly, out of the blue, down 25%. So this is really tough. So the question, Mike, is this, for me, is what time frames are we looking at? And what are the chances are that there could be some kind of a low? Is this much like the 1994 situation where it really, the market just bounced along? I remember being in the office of Jeff Vinnig back in those days, and looking at it, and we discussed it, and we had looked at the low that would come in for 1994. And actually it came right in, and then I thought, we could bounce, but I think we might go lower. And in fact, we didn't go much lower. We just went sideways to up. And I don't know whether this is the same condition. Now we've got conditions that are straining everything. So I'm just going to say to you, the best sector that you could be right now, the best sector you could be in is cash. That is a sector, and I'm just going to say, rather look at the charts. For instance, semiconductors. Semiconductors are even now holding not badly. The semiconductors could have a relief rally before they make another attempt at some kind of a low, but I would treat rallies as time to just get a feel for what could stay in place as a buy signal because it doesn't come back to your entry point, or you just get out and you have to retry. But cash is really the way that I would play it. And today's Wednesday, tomorrow and Friday, I'll talk a little bit more about the sectors that I'm looking at, which aren't there right now, that I think could do well in the towards the end of the year, about September, October. I hope that helps you a little bit.
Thank you.
Thank you. And crude oil is in